Hello everyone and welcome to a Glassnode video report for week 47, 2023. So what we're looking at today is Bitcoin trading around the yearly highs, around 37,000. So really holding up quite well. Given that the macro environment and things are always changing, Bitcoin really has had a pretty stellar 2023 thus far. And obviously a far cry from the pretty damaging market that we had in 2022. So with the market trading this strong and this high, at some point in time, we would start to expect that investors will take profits and actually take their coins off the table. And that obviously creates a bit of sell side pressure. And these are the kind of dynamics that we're going to be trying to assess. And we're going to be using the lens of long-term holders and also exploring the concept of supply in profit versus unrealized profit, which is a really important topic to get your head around. So what we're looking at today is this concept of supply and profit. And what do we mean by this? Well, when a coin goes in profit, when we say a coin is in profit, there's two different angles we can assess that from. There's either is the cost basis of that coin, meaning the last time it transacted on chain or entered an investor's wallet, is the cost basis literally 1 cent below the current spot price? If so, we consider that coin to be in profit. But that doesn't measure the magnitude of the profit. What is the actual delta between the actual coin's cost basis and the current spot price? So that's really the lens we're going to analyze this through, because those two can give us a different perspective on the market. We can have a very, very large amount of the supply that is in profit, meaning it has a lower cost basis than the current spot price, but it may only be 1%, 2% above, which generally speaking, that percentage delta, the unrealized profit, is actually what motivates investors to make decisions. People generally don't look at the number of coins or the number of UTXOs that are in profit. They look at their percent position change on where their actual profit multiple is relative to their average cost basis. So right before we get started, please do give us a rate, a share, and a subscribe. It does help this channel get to more people. Do let me know if you have any questions or comments and in the section below, and let's get stuck straight into the analysis. Okay, so here we are starting in our week on chain 47 dashboard, and we're going to start with a bit of an overview of the accumulation patterns that are currently in play. So we've covered this not for a little while, actually, the accumulation trend score. So I'll just do a quick refresher on what this particular chart looks at. It's looking at over the last 30 days. We're looking at all of the wallets, excluding exchanges and miners. So really that investor cohort. And what it's trying to track is over the last 30 days, has the aggregate balance been increasing or decreasing? Have investors been by and large adding to their wallets, pulling coins off exchanges and actually growing their balance? And there is more weighting towards bigger entities. So if you see a large entity, let's say they've got 1,000 Bitcoin and they add 0.1, that's not going to be a meaningful change. If you've got 1,000 Bitcoin, you add 500, that's going to be a meaningful change to your balance. And the same applies for shrimp. If you have lots of small investors who have 0.1 Bitcoin and they add another 0.1, that's a significant change. If they add 0.00001, then it's probably not a significant change. And obviously, the more shrimp there are, you can have lots of smaller investors that have the same weight as a single large investor. And it's that kind of blending between all these different groupings. So this particular chart will highlight in these white zones. This is essentially looking at periods of time when we have significant balance growth. So across all those different investor cohorts, significant balance growth. And we can see that bull markets really stand out, 2021. We can see that capitulation lows stand out, FTX, March 2020, Three Arrows and Luna. These are periods where investors are stepping in and adding to their wallet. You can also see some people buy the top. This does happen. So it's really telling us about these mechanics. We also have periods of distribution. So that's the opposite. All of these investor cohorts are seeing distribution over the last 30 days. It's a relative change over the last 30 days. And we can see that these different periods are generally points of weakness and softness in the market. Now, we've obviously had a couple of periods of, let's just say, strong-ish. Certainly, the FTX bottom was periods of very, very high accumulation because people were pulling coins off exchanges out of fear that their exchange may be next. This has really been, since the October rally, this has more or less been one of the strongest periods of balance growth that we have seen. And this is looking at it in a very aggregate, big picture view. We can actually break this down, and you'll find this chart for our professional members. You'll find this in the under Bitcoin in the dashboard section called Glassnode Engine Room. This particular chart breaks down that accumulation trend score into different wallet cohorts. So down the bottom, we have people who have less than one Bitcoin, so the shrimp cohort, 1 to 10, 10 to 100, all the way up to greater than 10,000. Now, what we can see is that through most of 2023, we've had pockets of accumulation. It's been spotty. Different groups have been distributing, others have been accumulating. It's kind of been a bit spotty. But what we can see is that since October, and again, this is when a lot of positive news about ETF and just generally speaking, a lot of macro overhangs have started to reach a bit of a resolution. We have seen investor confidence really grow quite significantly. Now, as we covered a couple of weeks back, we did break through and we traded up through that 30,000 level. We broke through the Cointime Economics true market mean price. Now, why this matters is this really has historically been the midpoint of the Bitcoin market. It's this kind of really nice mean reversion model with a mean and median of about 1, and roughly 50% of all trading days have been above it and 50% below it. So given that this is kind of breaking through that level on significant accumulation, you're starting to see this almost a confirmation of the uptrend. People are now having a harder time doubting that Bitcoin is up 110% on the year. It's becoming increasingly difficult to argue that it hasn't been an extremely well-performing asset and is holding up relatively well. And we're seeing this investor confidence follow through. Now, it's important, of course, to remember to keep everything in perspective. Sometimes these accumulations do happen at the exact wrong time, but sometimes they also happen at opportune periods. So it's just about understanding what that investor behavior is doing, which is obviously what we try to do here each week. Okay, so now that we're trading up at about 37,000, a lot of the coin supply is now in profit. Now, remember my definition from before. In profit means that the cost basis or the last transacted price on chain is lower than the current spot price. And that could be lower by 0.01 of a cent, right? As long as it is lower, the cost base of that coin is lower than the spot price, it is deemed in profit. Now, this is literally looking at the total Bitcoin supply. So a volume-based metric, how many BTC, you can actually see if you drew a circulating supply curve over the top here. During bull markets, the circulating supply would intersect with supply and profit because at all-time high, by definition, everything is in profit, at least very temporarily. And what we generally see is this particular model has actually come back up to November 2021, all-time high levels. Now we have to keep in mind that some extra coins have been mined over the last 2 years. So there has been additional coin supply come into circulation. But this is telling us that about 83% of the coin supply is now in profit, which on face value would kind of seem a little bit scary. It's getting a little bit hot. There's a lot of coins that are now in profit. But quite often, if the coin is in profit, isn't really the driving, motivating factor that makes investors make decisions. Generally speaking, it's the amount of profit, whether measured in dollars or in percentage terms, the actual degree, how far away is the cost basis, because it may only be 10 cents below. And that may just not be enough incentive. And that's really the concept we're going to explore here. Just because a coin is in profit doesn't necessarily mean that the magnitude of that profit is significant enough for investors to actually take those profits. So another way to visualize supply and profit, the total volume, is to look at it as a percentage of the circulating. Now, I'm going to start with this metric because it's very simple, but I want to introduce a concept. What we do quite often here at Glassnode is we use very simple models just to help people frame things up. Obviously, as for traders and investors, you can tweak how you actually model these things. Here, what we're going to do is stick with a fairly consistent formula for several charts, just to really explore this concept. You'll see that the middle band here is the cumulative mean, so the all-time average of the percent supply and profit. Down the bottom here, we've got a -1 standard deviation band. So it's essentially the cumulative mean minus 1 cumulative standard deviation. And as you can probably guess, this is +1 standard deviation. Now, the reason that we use these is because obviously each metric has its own resonance, its own frequency. It oscillates around a particular point. Some of these you can use a 4-year average, some of them are 2 years, some of them are cumulative. There's all sorts of different factors we can look at. Here, we're just going to keep it really simple, look at cumulative means and +or-1 standard deviations, and assess each metric within that context. Where does it sit relative to those averages? So for the overall supply and profit, we can see that we're now about halfway between. So let's just say probably around half a standard deviation in between the cumulative mean and the +1 standard deviation band. Now, you can see that we spend most of our time above that level. as we break previous all-time highs, this really is the euphoria phase of the bull. And we're going to break down what a bull market kind of looks like. As we come out of this deepest, darkest phase of the bear market, we generally trade between the cumulative mean and the -1 standard deviation band. This is this kind of tentative uptrend. The market's not really sure. It's still got a lot of PTSD from the bear market. We can see 2015 into 2016 was this type of period. 2019 was really choppy, but by and large spent a lot of the time down here below it. It's that tentative uptrend. It might be an uptrend. We think the bottom's in, but there's still a lot of PTSD out there. As the market then breaks above that cumulative mean, generally speaking, historically at least, it has tended to stay there. And this is this kind of confirmation. There's a bit more conviction, and it's harder to argue that the uptrend is in play when you're up 110% off the lows. Now, of course, none of this predicts the future. What we're just looking at here is framing up how these metrics have traded in the past, and we've certainly broken above that level with a bit of gusto. And again, that comes alongside breaking through that coin time price and several other different models that just say maybe that break of 30,000 could be a sentiment shift. Now, of course, if it doesn't hold, that then gives us another data point, but we'll park that there for now. Now, that is the number of coins, but there's another angle to this, which I mentioned before, is the unrealized profit. How much actual profit is held within the system? Because this is really what's going to motivate people to spend. So yes, whilst people may be in profit based on the cost base of their coin, if we look at that same concept from the lens of MVRV, and MVRV is basically measuring, and you can do this with several things. You can do it with the AV/IV ratio. You can do it for long and short-term holders. There's different instantiations of this. But by and large, we're looking at the magnitude of unrealized profit. What is the actual delta between the coin's cost basis and the spot price on average per cohort, or whatever we want to look at? Now we can see a very, very similar characteristic. This kind of tentative early bull market, the 2016 slow grind, spends a lot of time below the cumulative average, but certainly above the -1 standard deviation. We can see that the second phase of the bull tends to spend a bunch of time up here above the cumulative mean, but below the +1 standard deviation. And once we start breaking that +1 standard deviation, we're in some serious euphoria. Now, obviously the market can just keep going because the market, parabolas can tend to go to pretty extreme heights, but this at the very least gives us a bit of a roadmap for where we sit in the mix. And obviously we could convert this to a Z-score, and those who are more statistically minded can obviously do different transforms to this. But where we are at the moment, we are at the all-time mean. So what that tells us is that whilst we're, in somewhat elevated territory on the number of coins that are in profit, the actual amount of unrealized profit is not, it's not low, but it's also not exceptionally high. It's very similar to our kind of 2019 baseline. 2020, early 2020 is where we sat here. 2016, this kind of period. It's very consistent with this kind of post-recovery reaccumulation type behavior. It doesn't suggest that the market is overheated or oversold in either direction. It really has returned to that cycle midpoint. If we break down those components, let's only look at the unrealized profit side. So MVRV is on a percent basis, so the average profit multiple, let's call it. If we look at the amount of unrealized profit only, just the profit component, what we're going to look at is that we are pretty much at the same midpoint, and we see much of the same structure. So really, it's in that kind of cycle midpoint. There's not really a great deal of gravity in either direction. It's not telling us we're overheated. It's also not telling us we're oversold. Very much in that kind of midpoint phase. If we look at it from the unrealized loss component, so only looking at coins that are underwater in their position, naturally losses peak the highest and get above their +1 standard deviation towards the bottom of the cycle. Maximum losses at the lows. This is a very common phenomenon that we see, and it plays out cycle after cycle. Now we have an extremely low level, and we've just broken below the -1 standard deviation band. Now, when do we see this typically? At the end of this 2016 period, because basically with 83% of the coins in profit, there's just not that many that are in loss. So we're in this scenario where we're now below the -1 standard deviation band on the amount of loss in the system. And historically, it has tended to form these kind of long, sometimes multi-year patterns below this level. So in many ways, this kind of aligns with a lot of these different metrics saying that break above 30,000 and the current state of play for the market feels like the investors are probably in enough profit to maybe take some action, but probably not enough if they're looking for some of the return profiles that Bitcoin has seen in the past. And with that as context, this is where we're going to jump into this final section of the piece. We're going to look at the long-term holders. And the reason why I want to look at the long-term holders is they are generally moving, or they become mobile around cycle inflection points. And there's 3 inflection points I want you to take home. The first one is they're typically active near cycle bottoms. And usually it's first cycle long-term holders. People who literally buy the top, reach long-term holder status, and capitulate at the bottom. And we have a report called Buying High, Selling Low that covers all the market dynamics that we see play out time and time again. These long-term holders, they generally capitulate near the lows, and they're typically people who, it was their first cycle, right? They're kind of experiencing a 75, 80% drawdown for the first time. The second time that they're active is as we break the previous market all-time high. So this chart here is looking at long-term supply in blue and the inverse, which is short-term supply in red. As we broke the 20,000 all-time high back here in December 2020, you can see that there's a significant ramp up in long-term spending, which means short-term supply increases. Old hands spend and they sell their coins to new, somewhat inexperienced money. The third inflection point is generally around the all-time high, which is that they've essentially spent all of their coins and they go back into accumulation mode. They typically wait for the market to correct like it did in May 2021, a 50% sell-off from the top. Generally speaking, long-term holders start to get active and accumulate slowly but surely. The bear market still has a long way to go at that point, but as we covered in last week's, there's a couple of different waves where these long-term holders come in and start taking coins off the table. So with all that as context, let's zoom into our long-term holder supply. We continue to push to all-time highs. Now, it's really important to remember for long-term holder metrics, it takes 5 months for a coin to get in to that group, but it's instantaneous to exit. Once a coin has reached long-term holder status and it's been held for that 5-month period, that statistically meaningful period where coins just don't seem to move on a regular basis, spending them is immediate. So you'll see that these downtrends, these kind of dips below in long-term holder supply are immediate. These are coins that are being spent straight away out of that supply domain. Now I'm actually just going to zoom out for 1 second because I want to show you one more thing to keep in mind. When we look at long-term holder supply, generally speaking through bear markets, so the 2015, 16, the 2019, note that it tends to grind upwards, but generally plateau. Right? So it's kind of plateaus for a while and then it starts to really sell off. We see the same here in 2019. We have this significant rise in the bear and then we get this plateau and then eventually we finally get to that sell-off point when the market rallies. We haven't really had the same downwards drift undulations. It's been very, very strong and up and to the right for long-term supply. This tells us that there's very, very little spending, and this is the angle I want to go down here. If we look at it from this perspective, which is looking at the amount of coins in profit or loss, blue being long-term holders, red being short-term holders, we're going to focus on the blue for now. We can see these plateaus through the 2016. It's kind of all over the shop. And then we finally get that massive distribution pressure into the top. Very much a horizontal to sideways, not really a great deal of uptrend in terms of this plateau through 2019, 2020, and then distribution occurs. Well, here in 2022, we've actually seen long-term holder supply pretty much grinding higher with the exception of some capitulation events when 3 arrows and FTX blew up. But for the most part, it continues to push higher. We can also see that a very large proportion of the coins that are now in profit were actually long-term holders. So these are people who've literally held since the May through to July 2021 low. These are, or actually, it would actually go back to January and February of 2021 as well. So a lot of these coins that have just moved back into profit are people who've held for more than 2 years and are still hanging on, kind of waiting for that next phase of the market. So it's telling us there's a lot of conviction that still remains in the space. So we introduced this particular indicator, I think it was week Onchain 22 this year. This concept of spending is really important. And for long-term holders, what we're looking for here, we call this the binary spending indicator, or spending binary indicator, I should actually say. What we're basically looking for, this indicator down the bottom will flag above the green line whenever long-term holder supply decreases 7 days in a row. So what that's really trying to highlight is a week of persistent spending. long-term holders spending exceeds the amount of coins going into and migrating and getting older and moving into that group. And you can see that this typically correlates with euphoric phases of the bull. So we're really looking for these periods where we have significant spending by long-term holders that tells us things are starting to get pretty overheated, profits are being taken, and over time that signals, hey, this market may be getting a little bit long in the tooth. Now, where we are at the moment, we've had very minimal spending. To be honest, this thing continues to push higher. There was a little bit come in, about 2 or 3 days worth of spending as we had the rally in October, but by and large, long-term holders just seem unwilling to spend. So if we stitch all of this information together, what we have a investor cohort that holds almost the tightest supply that we've ever seen. And what we're really seeing is that very few of them are spending. And a big reason for that is that the incentive or the amount of unrealized profit in the system is just not enough. We're really at that cycle midpoint. We haven't reached those kind of extreme deviations yet. And it's telling us that by and large, investors are still sitting on their hands. And in many ways, that just feeds into this concept of tightening supply that we covered over previous weeks. So thanks everyone for tuning in for that session. Hopefully you found it a useful insight. Just keeping in mind the difference between supply in profit and unrealized profit. One of those is a magnitude or the delta between the cost basis and the spot price. And in many ways, that delta is what drives investor decisions. And with that as context, what we're really seeing is that there just isn't quite enough unrealized profit in the system yet to motivate these long-term holders to spend. And by and large, most of them are sitting on their hands, which again feeds into this tightness of supply that we covered over recent weeks, and certainly gives a bit of context as to why 2023 has been such a performative year for Bitcoin. It just has not given the pullbacks that many expected. And a lot of it is because people are just simply unwilling to part with their coins at current profit multiples. So anyway, thanks for tuning in for that session. Hopefully you found it useful, and I'll see you in the next one. Cheers.